If you're listening to this, you are probably somebody who's either just starting your trading journey or somebody who's been in it a while but still has not found that consistent edge that everybody looks for in their trading results. Either way, this is something I believe every trader needs to hear, because these 5 rules I'm about to go over with you guys are the real deal. They are not flashy. This is not clickbait. They're foundational. These are rules to trading success, not theoretical success, not Instagram success, real, long-term, sustainable trading success. And this isn't going to be a list that you just need to memorize and you'll be magically profitable. This is something I want you to understand. Because when you understand these rules, when you truly understand them, your entire approach to trading will change. You will stop chasing. You will stop guessing on every trade. You'll stop burning money, and you will start building your trading skills and building your trading account. So let's get right into it. Rule number 1, restructure your mind and your expectations. If I could force every new trader to get one idea completely drilled into their brain on day 1, it would be this: restructure your mind, restructure your expectations. I will admit, when I first started trading, I was expecting to get a Lambo probably within the same year, and I was very, very wrong. If you enter trading with the wrong mindset, you are doomed before you even take your first trade. I didn't have the right mindset, but I adjusted quickly when I started to realize. We've all seen it. The 19-year-olds showing off their most likely rented Lambos, the day in the life videos with pretty much no real substance to it at all. Maybe they show a couple charts here and there with hindsight analysis and hindsight trades. The trading gurus who flash Patek Philippe watches, I don't even know how to say that, Rolexes, talk about flipping $100 into $100,000 in 30 days, and they show you a MetaTrader screenshot to quote unquote prove it. You need to start to understand that 99% of that is fake. Maybe not 99%, maybe it's 98%. It's either rented, staged, or it's cherry-picked. And even if one person actually did it, that doesn't mean that you will. So yes, of course, there maybe are some of these traders who are flashing their Lambos. Maybe they are completely legit. At the end of the day, nobody really knows in theory. All I know is that I try to look at their videos and I never really see any analysis beforehand or any forecast. That's all I know. So that doesn't mean that you can just do that really quick and get trading success really quick. Not because you're not smart enough, because that's not how trading actually works at a fundamental level. We live in a culture where everything is instant gratification, instant delivery, instant dopamine. But trading is slow. It's quiet. It's unsexy. It's brutally honest. You're not going to go from flipping burgers to financial freedom in a month because of some EMA crossover strategy that you saw some guru post a video on. And I'm not saying that to discourage you. I'm saying that to prepare you. Because once your expectations are real, you can actually start to grow not only as a trader, but as a person as well. Here's the truth. You're here to learn first. You're here to absorb. You're here to experiment. You're here to fail, reflect, refine. Then slowly, you will start to earn. Maybe inconsistently at first. Maybe small wins. Maybe you go from a losing trader to a break-even trader within a year. That is an amazing progress that you should be proud of. Most traders are losing. So if you go from losing to break-even, you are definitely on the right path. So you might not consistently win at first. Maybe the wins are small. But I'll tell you what, those wins are going to compound if you stay the course. When I stopped trying to be rich by next month, I started to make real progress in my trading. When I stopped expecting to flip $100 into $10K and started focusing on, flipping myself, my mindset, and my discipline, that's when things really started to shift for me. So let this be burned into your brain. Rule number 1 is to restructure your mind and your expectations. You're not here to get rich quick. You're here to get better. Slowly, intentionally, and with grit. Rules to trading success. Rule number 2. Get the best paying job that you can find. This one might surprise people and can actually be controversial for whatever reason. Most likely because of the gurus who are flashing lifestyle saying you can make $100 a day in 30 days. If you just follow my simple strategies, they definitely don't agree with this. You want to succeed as a trader, you have to get a good job. A high-paying, stable income job. You wouldn't believe how many people I message say, I want to join your group, but I don't have the money for it. And my immediate response is never, oh, save up and you can join my group. No, my immediate response to them is to get the best paying job you can, learn for free on YouTube, and practice. You need to have a high-paying, stable job. One that not only pays your bills, but funds your trading account. And it gives you the peace of mind to trade properly. Let me explain why. Trading under financial pressure is like trying to defuse a bomb with shaking hands. You're not thinking clearly, you're not patient, and you're not rational. You're desperate, and desperation always leads to poor decisions. Let's say your rent is due next week and you're down to your last $500. What are the odds that you're going to follow your plan on the next trade? Are you really going to wait for that perfect setup, risk only 1%, and walk away when it's not there? No, you're going to force it. You're going to over leverage, and when it doesn't work out because you weren't in the right mindset, you're going to spiral. That's why having a good job matters. It takes pressure off. It allows you to look at the market as a place of opportunity, not desperation. And I'm not saying settle for any job. I'm saying try to get the best job that you can. Even if it means upgrading your resume, learning a new skill, or moving industries temporarily, make more, spend less, build a cushion. If you learn how to be frugal with the income that you have now, it will only benefit you in your trading success because you won't rely on the trading income as much as you think you need to. So because that cushion gives you room to breathe, and breathing room is everything in trading, rule number 2, secure income, strong income. Not just so you can fund your trading, but so you're trading so that you're not trading from a place of fear. Rule number 3, learn one strategy, find a mentor, and backtest that strategy thoroughly. I know that's pretty much 3 things, but I wanted to put it all into one rule because I think they are related. Most new traders never make it past this stage. They don't want to do the work. They want to be spoon-fed setups instead of building the real understanding. Now, I am blessed with the community that I have built. The odd time I get people joining my group expecting me to tell them exactly where to buy and sell, and they get frustrated when I do not do that. But a lot of the people in the group are here to learn, which is what we are trying to do. Let me break it down. First, pick a strategy. 1, don't bounce between 5 different indicators every week. Don't mix the RSI, supply and demand, harmonic patterns, whatever trading strategy you can think of. Don't mix them together at first. That's like trying to learn 5 languages at the same time. You'll just get confused and overwhelmed. I highly recommend looking into different strategies. I am a supply and demand zone trader, and that is what I prefer to trade. It is not the only strategy out there. I highly recommend it because I think it is the most objective trading strategy there is, but it does not mean that it is the only strategy that you can learn. But it is important to pick a strategy. Once you quote unquote master it, then you can start to add different things. Maybe that could increase your win rate, obviously through backtesting. So find a strategy that makes sense to you. For me, again, it is supply and demand trading because it's logical. It's rooted in price behavior. Whatever it is for you, stick to that, learn everything about it, study how it behaves in different market conditions, and backtest it. Now, once you've picked your strategy, get a mentor if possible. A mentor is definitely not necessary, but in my opinion, it can help. A mentor does not mean a guru. A mentor means somebody who's been through it. Someone who can look at your chart and say, yes, that is correct, or no, that's a weak zone, or that's a weak trading setup. Yes, you can learn alone, but it will take longer. A mentor definitely speeds up the process, and they help you avoid common traps. They shorten your feedback loop. Just like in real world with skilled trades, when you become an electrician or a plumber or a pipe fitter or whatever skilled trade you want, you always are going to be learning from what they call, at least here in Canada, is a journeyman, a skilled person who has at least 4 or 5 years experience in the field and have passed all of their tests. Now comes the part no one wants to do, backtesting. This is your proof. Go to the charts, rewind price, and start tracking. You can even backtest right now. You could just mark out zones as the price plays out or whatever you want to trade and see how it works and start marking down wins and losses and what took place. Mark every setup that fits your criteria. Write down the result. Did it work? Did it fail? What was the overall risk to reward? You do this for dozens and then hundreds of trades. You can usually, after 30 trades or so, you can tell if something really is a really bad strategy, and then you can kind of wean out the really, really poor ones with awful results. But if you have one that's somewhat close, then you need to test it over hundreds of trades. You see which setups are reliable. You will notice how often they occur. You will spot patterns inside of these patterns. Now here's the key. Once you're confident in your edge, you go live with a small account. Not to make money, but to prove to yourself that you can follow your system under real conditions. I do not recommend paper trading at all. The only reason I would ever recommend somebody to paper trade is to learn the software they are placing trades on, to learn how to actually place a trade on the broker that you are trading with. That is it. You need to prove to yourself again that you can follow your system under real conditions. That doesn't mean to risk too much. It just means risk 0.5% or 1% per trade, never more. You're not trying to grow that account. You're trying to grow your consistency. And with that consistency, you will grow your account. Do this for a full year. If you are profitable after a year of real execution, whether that profitability is $100 or it is $10,000, then and only then should you scale up your risk or deposit more money into your trading account, which combines us with rule number 2, which was to get the best paying job you can so you can fund your trading account. So rule number 3 is a long one, but here it is. Pick a strategy, get a mentor, backtest it obsessively, then trade small and stay consistent. Rule number 4, become a stoic. If you don't control your emotions will control your trading. And that goes with everything in life. This is where so many traders fall apart, even ones who know their system inside and out. They've studied, they've backtested, they've planned, but then they panic when it comes to trading in the live markets. They hesitate on a perfect setup, they revenge trade after a loss, they close a winner too early, and they hold a loser too long. Why? Because their mind is undisciplined. Their emotions are driving the bus. That is why I say, become a stoic. If you've never read Meditations by Marcus Aurelius, start there. It's not about trading, but it is about control, about focus, about not letting outside events shake your internal state, which is what you will learn when you read that book. That book has personally changed my life for the better and my trading for the better. Trading is emotional warfare, and your enemy isn't the market. It's you. You need to train yourself to stay calm when things go wrong, to trust your system, even when it's in a drawdown, to take the loss without spiraling, and to win without getting cocky. This is what separates professionals from amateurs. Amateurs ride the emotional roller coasters, and professionals stay steady whether they are in a drawdown or on a win streak. Confidence is huge in trading, but it must be earned. Overconfidence will destroy you just as fast as self-doubt. You need to operate from a place of quiet certainty, not hype, not hope, but certainty. So train your mind like you train your strategy. Read philosophy, journal your thoughts, reflect on your actions. Develop mental clarity because that will show up in your trades. Rule number 4, become a Stoic, not just in trading, but in life. Rule number 5, journal every trade that you take. This is the most underrated edge in trading. Journaling your trades sounds boring. It's definitely not sexy. It's not exciting, but it's one of the most powerful tools that you have as a trader. Why? Because you can't fix what you don't track. Let's say you're taking 10 trades a week, but you're not writing them down. You're not reviewing them. How would you know if your edge is actually working? How would you know if your losses are due to bad trades or bad execution? Your journal will show you. It shows your patterns. Maybe your London session trades are outperforming your New York session trades for whatever reason. Maybe your losses come mostly from trades that don't align with the higher time frames. Maybe you perform worse on Mondays for whatever reason, or better when you wait for a second retest. That's the kind of insight you only get through tracking and journaling your trades. And sometimes all it takes is one minor tweak to flip your performance. Maybe your risk to reward that you're looking for is too ambitious. You keep aiming for a 2-to-1 risk to reward, but the setup actually only supports a 1-to-1. And maybe just by tweaking that one little change can turn you from a break-even trader to a profitable trader. Your journal is your mirror. It will tell you the truth about what you've been doing. So every trade, write it down. Entry, exit, reason, screenshot, notes, even emotion. Then once a week, review it, look for patterns, start to track those patterns, and then look for the adjustments and adjust accordingly. That's how you evolve. So rule number 5, journal everything, and that's how you become your own coach. These are my closing thoughts. Let's recap. Rule number 1, restructure your mind and expectations. That is the absolute first rule. Rule number 2, get the highest paying job you can so you're not trading under pressure. Rule number 3, pick one strategy. Find a mentor, backtest, and start small. Rule number 4, become a Stoic. Control your emotions before they control your trades. And rule number 5, journal every trade. Track everything. Learn from your own data. These 5 rules are not about hacks or shortcuts. They are purely about discipline. They are about maturity. They're about becoming the kind of person who deserves trading success. So if you take anything away from this podcast, let it be this. Trading success doesn't come from one lucky trade. It comes from thousands of small decisions made with clarity, discipline, and patience, and a lot of the times you just need to let your risk to reward play out in the long run. So do not be a strategy hopper. Pick a strategy, stick to one, test it, become a Stoic, and you'll be on the right path to trading success. If you are listening to this podcast or watching this podcast, whatever you're doing, make sure you subscribe to my YouTube channel at FX Telepath for weekly Forex forecasts every single Saturday. I hope this video helped. Let me know what you thought.